Good afternoon, everyone. It's about 20 to 4 here on Friday, the 30th of April. So first 4 months gone already. After a crazy day yesterday on the American market, we've opened lower today. And as you can see, the declines well in advance of the advances. So the short-term trend on VectorVest is still up, the underlying is still up, and we've got a confirmed up in place. So if we have a look at the market timing chart, there she is. As you can see, this is still drifting up, folks, and the buy-sell ratio is not coming to the party. That's never good. Look at it a little bit closer. There is the long-term trend, went up on the 8th, and the medium-term trend, the DEW, went up a few days before that as normal on the 1st. So that DEW has been up for the month. This is crawling up on very little participation. Always a worry indeed. When price and breadth are going the same way, that's a much more positive situation. So let's have a look at what it's done today. There we are. That's yesterday's crazy day. That was the open. Flew down, flew up, and then came back. In fact, the locals on the floor are having fun running stop losses at the open, so no direction at all. These lows are 78% of that, and it came back in 3 waves, so I have a bearish view of the market this afternoon, and those of you that know me well will know that I favour the 78% retracement, and as you can see, 78% retracement. Still holding this market. It's been down there now once, twice, 3, 4, 5, 6 times. So I have a long position in the market from 4189, okay, with a stop loss down around here at about 77. So 10, 12 points of a stop loss. No idea whether it's going to work or not. The last time I looked at this chart, it was looking much better. It was right up at 97. I've had a pretty good run in the last day or two. I can't complain. I didn't get the sell-off yesterday, but I had again a bullish view, and I managed to get this last little bit from 94 up to about nearly 20. So quite happy with that. So let's see what happens. So if we actually now go to the shares that I'm holding, and some of them are going great, like Horton's. Off a bit today, and I've got to be careful I don't give money back here. Applied Materials is off a bit. Apps is the only one that's up on a really bad day. That's a good sign. Apple, the forward advice of Apple wasn't good, i.e. they may not be able to sell as many gizmos because there's no chips around. So that's not good. As you can see, the SPX is down 22 points. I'm holding those positions. I think the position that has caused me most grief is Upstart. Upstart was a technical trade with no fundamentals, and those always cause most difficulty. The low yesterday was 62% of the last daily range, so I'm not unhappy with that, and it seems to be moving. It's flat today and it's gained a bit of ground, but I need to be careful I don't give money back in Horton's. That's been an exceptionally good trade, and Lulu is going the right way. It's off a little bit today. I bought it at 320 about a week ago. It's at 340. I think it's got a great deal of potential. The gold market. Well, the gold market, as you can see, there's the bullion market, and yesterday's low was marked by those 2 highs. That's where the buy orders were. I haven't put on the 40-day stochastic. I've just got the 8, but this 8-day stochastic is starting to get there, folks. It's starting to get down towards a buying position, and already we're seeing a divergence between these last 2 lows. That and oh, come on, David. that. All right, so I think we'll probably get down here over the next couple of days. It's my view that the best buying opportunity for gold will be when that stochastic gets down around 20. And at the minute, it's struggling to pull back and it's going more sideways. This is a key level, folks. That top there, that 1756, that's a key level. As I said in the last video I did, this level, pretty much 1800, is 62% of this range and 38% of the bigger range. So a really, really important number. Stochastic pulling back down to the 20 level, and then a nice day up. Then I think that will be the signal for me, not for everybody, because gold stocks are not for everybody, but for me to buy a few more gold stocks. I'm holding on to polymetal. I'm going to show you the stock in a second. So if we now move to United Kingdom, FTSE was looking good today, and certainly I saw some of my stocks, although I don't look at them intraday. People keep emailing me about them, so I think they're reasonably well up today. Yesterday we had a short-term trend is down, underlying trend is up, we've got a confirmed up, and the old pointer was in the red. So I have a portfolio. I haven't done that much with the portfolio, to tell you the truth. I could probably have been much more aggressive. Nevertheless, I'm well pleased with what it's done over the last year. Most of these, as you can see here, it says here March the 24th, and that portfolio, I was fully in cash after the sell-off last year, and that portfolio, the first stock was bought on March the 24th. Now the confirmed up didn't occur until April the 24th, so I was getting in after the sell-off with some of the short-term market timing signals on Victor Vest, and that proved, at least this time, to be exceptionally profitable. And I have these charted, I think, and I'm charting them, here we are, I'm charting them on a weekly chart over 3 years, and I think that the weekly chart should always be your first port of call. This is CCL, Computer Center, and first thing you can see is this earnings per share is growing strongly, and there was the sell-off. It came right down to that old bottom and reversed, and the confirmed call came in somewhere about here in April, and that was a buy-in at about 15. It kept on going, and as you can see, there was a red sell there, and I actually sold half of it, and that was clearly a mistake, because that was the right place to buy in. But for once I took the signal. It's moving up strongly now, and having a very good week indeed. So that looks as if it's bound higher. Well pleased with that. Bellway. Now Bellway was purely a recovery situation, and it's got a worrying look about the chart. And this is a very important level. And I mentioned 78% a moment ago. I'm well up in this stock. I bought it just here, just at that low. That's what Mr. Wyckoff would call a sweet spot, and maybe even a spring in there. There's a spring, yeah, just there. Bought it just there. But if we look at this now, we can see that that was the sell-off, and this guy is sitting right at 78% of that, and it's done a couple of red candlestick patterns, of which I've forgotten the name of, but nevertheless, that's a very, very important level. What's happening up there, folks, is that people are taking profits up there at that level, and those people that believe the housing market is going to hell in a handbasket are shorting it up there. Okay, so that's a very important level to get through, and as you can see, forecast earnings per share not looking that good coming out of the pandemic. So very, very important level for Bellway, somewhere up around here. Okay, that's Lion Trust Asset Management. Very pleased with that. I spent a long time apologizing for the lack of performance in this bit, but I always thought that this had a nice cup and handle look about it. Earnings per share is growing strongly, as you can see, 40p to 90p. That's quite something. And this looks bound much higher. Vector Vest valuations at £21, so that looks good. And again, we bought into it somewhere down around here at about 1,000. So that's it's a good percentage in a year in an environment with the banks paying 0.5%. JD Sports broken this old high. That's a pre-COVID high, and as the big danger here that everybody's talking about is that can they crack it in the US? And there's this great ambiguity about British firms being able to crack the US. Time will tell. Okay, time will tell. That's Games Workshop. Again, into it from down here. Look at this earnings per share growth. That was, I've added to this a couple of times now. I added here. And I added here again, so I'm looking forward to a breakout in this share relatively soon. We shall see. And that's Italia Mining, folks. Earnings per share growing strongly. Look at this incredible move based clearly on the copper price. It's up today, and I think it's going to close above my little trend lines. The chief commodity analyst at Saxo Bank, Ole Hansen, who's a good guy, first class chap, he feels, and he wrote in a note that the major danger to the copper market at the minute would seem to be technical, in that it's significantly overbought and an awful lot of new money running into the copper market. So just beware that the copper market, I think, has got many, many years to go. But it could be, in fact, at the end of what Elliott people would call a wave one, and it needs a good, strong pullback. So we're towards the end of this first phase, I believe, in commodities. Nevertheless, it's been incredibly strong this week. So Italia Mining, a magnificent chart. Wish I'd got all of it, but I didn't. That's Halma. And this is a quality company, just bought a couple of acquisitions during the week, and that looks great. That's Pershing Square. That's my entry point just there. It broke, pulled back to that. Now, when I talk about that entry technique at seminars, people look at me and they say, well, I knew that already. But my answer to them, you may know it, but how many of you are actually doing it? Because when you see those two red weeks down, that can put the fear of God into you very easily. So there's a big, big difference between talking about buying a pullback to an old high and actually doing it. Remember, the pullback should happen on falling volume. Again, we've got a textbook 5-wave continuation pattern. You can see it more easily on the daily chart. It's pulled back to those charted so far an inside week, so I particularly like that. And as you can see, the valuation in Vectorvest is really off the scale. Okay, so this is going from losing money to making good money over the last couple of years. So that's the GB group. I particularly like the GB group, and I added to the little bugger there, and we're into it from down here somewhere. Earnings per share has grown from 12 pence to 20 pence, and that was an obvious entry to me where this resistance became support. So that's looking well. Let's got into this very late. One of our presenters at our last national user group, Mark from Guildford, or Godalming should I say, has been into this much longer than I have. There was clearly a first class entry here that I missed. Okay, you can't just there. That was the entry. Okay, but I didn't. I bought this breakout of this ascending triangle. My stop loss is at entry. I'm glad to report that it's up reasonably today, because I wouldn't like to give that back. This Sylvania Platinum is going great guns. Again, we have to just worry, stress. My son tells me if I haven't got something to worry about, I'm not happy. But Ole Hansen at Saxo is a first-class commodity analyst, and when he says that commodity markets look very overbought at the moment, and the major risk is technical, in other words, the fundamentals are sound, it's just gone too far too fast, he's somebody to listen to. So I'm holding it. I've added to it many times. The Vectorvest valuation is up here, and it's up a bit today. We'll see what the weekly close is in an hour or two. Cranswick has gone nowhere, but they make great sausages, so I'm holding it. And that's Polymetal, folks. It's pulled back to that 62% retracement. I know I've ignored this stop loss, but I felt that as long as it's above that 62% retracement, I'll hold it. It's the only gold stock that I've got at the moment. I'm itching to buy into Pan-African Resources, but I haven't done it yet. Textbook 5 wave, but pretty much the same as what the bullion price has done itself in that flag that the bullion price is in fact charted. So I think this is going to come back with the bullion price. I'm hoping that I'll be able to stay in this. There's a dividend coming which soothes the pain, and this of course is this punt on a pharma stock. It's just about in the money. This stock being strongly accumulated down here. Now that's the portfolio that I speak about on a Monday afternoon. I have quite a heavy holding in BlackRock World Mining Investment Trust as well as that, which I haven't brought into that portfolio because it's the only investment trust I've ever bought ever. So it's not a stock purchase, but it's done exceptionally well, and I've spoken about it every Monday afternoon for a very long time. Wouldn't be at all surprised, folks, to see this come back. And that's a worry, to see this little stock come back somewhere down around here before it goes again. They like to come back in 3 waves, and that's what it's starting to look like. So leave that off for a while. So I hope that helped, folks. Please, when you start to look at a stock, start with a weekly chart over 3 years to 5 years. Put on forecast earnings per share, put on the vector-based valuation, and you want to use your loaf. You want to find a share that's trending upwards, that is undervalued, where earnings per share is growing strongly, and you want to do your best to try and finesse an elegant entry, mostly in the trend where they pull back to the last old high. So don't make it too complicated. Now, next Monday afternoon, the 3rd, we won't have a vector-based Q&A because it's a bank holiday. So our next Q&A will be on the 10th of May. So have a great weekend, everyone. Take care of yourselves. Bye-bye.